Hello everyone, this is Grace here. In this video, we'll be discussing illustration 8 from the chapter presentation of financial statement. So from the following particulars of Arvind Limited, prepare a balance sheet as on 31st March 2016. Equity share capital 7 lakh, 9% preference share capital 2 lakh, land and buildings 5 lakh 60,000, general reserves 3 lakh 20,000, 6% debentures 3 lakh, surplus from profit and loss 1 lakh 38,200, trade receivable 68,700, stock and trade 85,200, trade payable 71,000, provision for taxation 1 lakh 40,000, plant and machinery 10 lakh 68,000, preliminary expenses 12,400, cash in bank 49,800, furnitures and fixtures 25,100. The following further information is supplied to you. The authorized share capital of the company consists of 1 lakh equity shares of rupees 10 each and 5,000 9% preference shares of rupees 100 each. The debentures are secured by floating charges on the assets of the company. So this is a question. Let us get into the calculation or solution part and understand how to assign all these items into the presentation of financial statement, that is your balance sheet. So Arvind Limited balance sheet as on 31st March 2016, particulars note number and as on 31st 3 2015 16. Equity and liability. So first items is equity and liability. So before we allocate our items in your balance sheet, we will get into your working note. So first, notes from the integral part of the balance sheet. So share capital authorized 1 lakh equity shares of rupees 10 each, that is which is stated in the question, which is stated share capital authorized share capital of company consists of 1 lakh equity shares of rupees 10 each and preference 5,000 at 9% shares of rupees 100 each. So 1 lakh into equity shares of rupees 10, which will give you 10 lakh, 5,000 equity shares of rupees 100 will give you 5 lakh. So the total authorized is 15 lakh. Issued, subscribed and fully paid. So as per the adjustment, what is stated is the as per the balance sheet, equity share capital is 7 lakh and 9% preference share capital of 2 lakh. So here authorized is 1 lakh, but authorized is 1 lakh, so when rupees 10 each, which will give you 10 lakh but the actual equity subscription which is shown in the balance sheet here is 7 lakh. So if per share value is rupees 10, then here 7 lakh shares are the cost of equity shares is 7 lakh. So the cost is 7 lakh divided by 10, which will give you 70,000. So 70,000 equity shares of rupees 10 each will be recorded in the working note. So 70,000 equity shares of rupees 10 each, which will give you 7 lakh. Next we have 9% preference share capital of rupees 2 lakh. So according to authorized, 5,000 9% preference shares of rupees 100 each is given. So here 2 lakh divided by 100, which will give you 2,000. So 2,000 shares are being issued. The 2,000 preference shares are being issued at rupees 100. So as per the working note, it is 2,000 a preferential 9% preferentials of rupees 10 each, which will give you 2 lakh. So the actual subscription is 7 lakh plus 2 lakh will give you 9 lakh. Then the next item after share capital is your reserves and surplus. So under reserves and surplus, the first item is general reserve. So in the question, they have given us general reserve, which is 3 lakh 20,000. So after general reserves, we need to check whether we have any surpluses or profit which is made, or any cancellation call scenarios, I'm sorry, any profit which is there, or any proposed dividends which is to be paid, or any taxes on dividends is charged. We need to check all that. So now here in this question, they have given a surplus from profit and loss statement. So they have given in the liability side surplus from the profit and loss statement. So surplus here is nothing but the surplus what we have got here is, so the surplus from profit or loss statement is the profit what Arvind Limited has been got, which is 1,38,200. So now as per the working note, general reserves are recorded, which is 3,20,000, and the profit which is earned during the year is 1,38,200. With that profit, we will set up all the expenses. So preliminary expenses written off. So preliminary expenses are those expenses which are incurred before the incorporation, initial stage, and commencement of the business. So this expenses incidental for the formation of the company, also regarded as preliminary expenses. So these are considered as deferred revenue expenditure. So these expenses will be set up from the surplus or the profit which has been earned, because it is the expenses which is incurred before incorporation or initial stage of the running of the business. So from the reserves, surplus or profit what we have got, which is 1,38,000, we will minus our preliminary expenses which is there in the question. Preliminary expenses written off is 12,400. So we will minus 12,400 from the profit what we have earned, which will give you 1,25,800, which has gone to your reserves account. So your total reserves what is maintained is 3,20,000 plus 1,25,800 will give you 4,45,000. So after your jet reserves and surplus, we have long-term borrowings. So under long-term borrowings, we will usually have debentures. So have they given debentures? Yes, 6% debentures of rupees 3 lakh. So debentures are secured by floating charge on asset of the company. So usually debentures are secured that the debenture holders have the right over the assets of the company. So only always there will be fixed charge, that is fixed charge in the sense they have only they have the right over only fixed assets or certain assets in the organization. When it comes to floating charge on the assets of the company, they can fluctuate, or they can change into any categories of the assets of the company. It is not limited to them. So therefore the debenture holders are secured by floating charges on the assets of the company. So now we will be considering in the working note long-term borrowings, which is 6% debentures secured by floating charge of the asset, which is 3 lakh. Then we have our short-term provisions. So in our provisions, we need to check what are the items of provisions. So in this problem, we have only one provision, which is provision for taxation, which is 1,40,000. So we will be recording here 1,40,000. Next is our tangible assets or a fixed assets. And a fixed assets is divided into tangible and intangible. In this problem, we have only tangible assets. So our tangible assets are land and building 5,60,000. Then we have plant and machinery, which is 10,68,800. 68 I'm sorry 10,68,000. Then furniture and fixtures, which is 25,100. So we will take all the three items, and the total of it is 16,53,100. So we also have current assets. So we can directly take the current assets in your in the balance sheet. So let us start preparing the balance sheet of the company. So the balance sheet of the company is, we'll start up with Arvind Limited balance sheet as on 31st March 2016. First item is equity and liability. Under equity and liability, shareholders funds, share capital. According to the working note 1, we have got 9 lakh, which is actually subscribed amount. So 9 lakh is your equity share and capital. Next is your general reserves, working note 2. So the general reserves total what we have got is 4,45,000, which will be considered in the problem. General reserves and surplus 4,45,000. So your equity and liabilities total is 13,45,800. Next we will have our non-current liabilities. So non-current liabilities, under non-current liabilities, the classifications are long-term borrowings. So there is working note for your long-term borrowings, which is a 6% debentures under floating charge on the asset, which is 3 lakh. So we will record working note 3 lakh. Then is our current liabilities. So current liabilities are trade payables and short-term provisions. So our trade payables, which is there in the question. So trade payables is 71,000. So we will take here 71,000. Then we have a short-term provisions, which is there in our working note 4. Short-term provisions is now, it's your provision for taxation, which is 1,40,000. So we'll be considering 1,40,000. So this is your total equity and liabilities, which will give you which will give you 18,56,000. So your equity 13,45,800 plus your liabilities 2,11,000 will give you 18,56,000. So next we will get into our assets classifications here. Under assets, non-current assets. Under non-current asset, fixed asset. Under fixed asset we have tangible and intangible. In this problem we have only tangible assets. So according to the working note of tangible assets, we have three assets, which is land and building, plant and machinery, furniture and fixture. The total of it is 16,53,100. So we have recorded 16,53,100 under the working note 5. Next is our current assets. Under current assets we have in a problem stock and trade, we have trade receivables, then we have cash and bank. So we will be taking those items here. So we have stock and trade is nothing but inventories 85,200 as per the question. Trade receivables 68,700. Then cash and bank, which is 49,800 is being considered. So the total of the asset is 2,03,700. The total is 18,56,800. So here the total of your equity and liabilities matches with your asset, therefore the problem is right. So the next problem what we are going to discuss is illustration 9. So under this problem, the trainee accountant of John Smith and Co. Limited, who has gained a little knowledge of accounts, has drafted the following balance sheet: assets, land and building, fixed deposit, furniture, goodwill, stock, creditors for goods, plant and equipment, cash, bills payable, bank calls and arrears at rupees 2 per share. Then they've given our liabilities: capital of equity shares, general reserves, 10% debentures, provision for taxation, securities and premium, profit and loss balance, which is credit, investment in Z Limited shares, bills receivable, proposed dividend, capital reserve, debtors for goods, unclaimed dividend, authorized capital, equity share of rupees 10 each, share forfeitures. You are required to redraft the above balance sheet as per Schedule 3, Part 1 of the Companies Act. So we will reclassify the balance sheet as per Schedule 3, Part 1. So the reclassification. So before reclassification, let us get into the working note. So according to the working note, the first working note is for to form the integral part of the balance sheet is share capital authorized, according to the authorized as per the question, 18 lakh capital, 18 lakh equity share of rupees 10 each. 18 lakh equity shares of rupees 10 each, which is called up, which is 18 lakh. So it authorized is actually given here in the problem, which is authorized capital of 20,000 equity shares of rupees 10 each. So under share capital, authorized is 20,000 equity shares of rupees 20,000 equity shares of rupees 10 each, which will give you 2 lakh. 20,000 into 10 will give you 2 lakh. Then issued as per the question is, which is 18,000 equity shares of rupees 10 each, which is 1,80,000. So 1,80,000 is your issued. So in that, do we have subscribed? Under subscription column, we have subscribed and fully paid 70,000 equity shares of rupees 10 each, which is 17,000 equity shares of rupees 10 each. So how did we get 17,000 equity shares of rupees 10 each? Is actually authorized is 20,000, issued is 18,000. Out of issued 18,000, as per the question, which is stated that the share you have calls and arrears at rupees 2 per share of 2,000 rupees. So calls and arrears is the unpaid amount where company calls each time. First call will be for application money, and for the second call for the allotment money to be paid by the shareholder. Next, the third allotment, the third installments or calls will be made to do the final settlement. So as they have not made these shares would be deducted from the shareholders capital or shareholders in the number of shares. So they have stated here calls and arrears at rupees 2 per share, which is 2,000. So 2 per share, which is giving you 2,000. So number of shares will be 2,000 divided by 2, which will give you 1,000. So 1,000 shares, for 1,000 shares the call money has not been paid. So that is why call scenarios is 2000. So 2000 divided by 2 will give you 1000. That means 1000 shares of rupees 2 each, which will give you 2000. So out of 17,000 equity shares, 18,000 equity shares, we have got 17 because 1000 is subscribed but not fully paid. So subscribed and fully paid is 70,000 equity shares of rupees 10 each, which will give you 1,70,000. Subscribed but not fully paid, so this 1000, which is your calls in arrears, which is not fully paid. So out of this 1000 equity shares of rupees 10 each called up, which will give you 10,000. Where supposed to pay 10,000, calls in arrears, we are minusing calls in arrears because it is not been paid. So how much is not been paid? 2,000. So out of 1000 equity shares of original of face value of rupees 10 each, where he is supposed to pay 10,000, after making the call, he is supposed to, a company will issuing company will make a call to settle the balance amount. So for the he is not settled, the shareholder has not settled 2000 rupees, so we will minus as or show it as calls in arrears of 2000, which has not been paid by the shareholder to the issuing company. So out of 10,000, 2000 is being minus, which will give you 8,000. So 1,70,000 minus 8,000, which will give you 1,78,000 is your funds, share funds. So with this amount of 1,78,000, add forfeiture of shares. So forfeiture of shares is nothing but equity. Forfeited shares are those shares which are equity instruments, which are being cancelled, or which has been cancelled by the issuing company for the shares for which the payment has not been paid by the shareholder. So as the payment is not being paid by the shareholder, it is been cancelled. When the shares are been cancelled, it will be added on the value of those shares of allotment, or the amount of such forfeited shares will be added to the subscribed list to value what is the total number of shares the company is being deal with. So this 500 shares forfeited, which has been added. So from 1,78,000, add forfeited shares of 500, which will give you 1,78,500. So the share capital amount is 1,78,500. So the next item is reserves and surplus. So reserves and surplus, under reserves and surplus, we have in the question, we have capital reserve, we have general reserve, capital reserves, and security premium, and surplus in statement of profit and loss. So all these reserves are being made. There's no expenses which has to be set off from these surplus which is being got from the profit and loss. So capital reserve of 12,000, 18,000 security premium. So we have general reserves of 10 lakh will be recorded, security premium of 18,000 will be recorded, profit and loss balance credit, which is 8,000, is being recorded. Next we have capital reserve, which is 12,000. So 12,000 is also been recorded. So the surplus in statement of profit and loss in your question, which shows that it is in your credit balance. So when it is a credit balance, it indicates it is a profit which has been earned. So 8,000 is the profit which has been earned. So the total reserves and surplus is 48,000. Then we have a long-term borrowings. So long-term borrowings are usually your debentures and any borrowings which is uh, more than a year, more than period of time will relate to the long-term borrowings. So according to the question, the long-term borrowings are your debentures, 10% debentures 35,000. So 10% debentures 35,000 is being recorded, 35,000 fixed deposit accepted. So you have fixed deposit which has been accepted. So in the question, if you look into it, fixed deposit accepted, which is 15,000. So 15,000 is an asset which has been accepted from the outsiders. So fixed deposit of 15,000 is accepted. Fixed deposit will be usually more than a year, which is your long-term borrowings which you have made. So 15,000 and 35,000 of debentures has been recorded in your working note. So these are your long-term borrowings. Next is your fourth working note, which is trade payables. So trade payables here, you will if you're having trade creditors or trade payables and bills payable, you will be recording it there. So we have bills payable of 7,000, which will be recorded under trades payable. So then we have creditors for goods. So again you have creditors for goods, which is 9,000, which is nothing but your trade payable. So you are supposed to pay to your creditors 9,000 and bills payable 7,000. So we will record it under trade payables 9,000 and 7,000, which will give you 16,000. Then the other items is other current liabilities is your unclaimed dividend. So other current liabilities is your unclaimed dividend, which is mentioned in the question under liabilities unclaimed dividend 11,000. So the dividend which has not been paid or which has not been claimed by the outsiders, but it is your liability to pay them anytime. So when they claim for it, it is to be paid. So it is your which is your outstanding liability which has not been paid, which is 11,000, will come under other current liabilities. So other current liabilities, we have unclaimed dividend. Next we have short term provision. So all your provisions will come under that. So that is your provision for taxation, and proposed dividend is also your provisions which has been made. So provision for taxation, which is 22,000, and proposed dividend, which is 14,000. So we will be recording it in your working note. Under short-term provisions for taxation 22,000, proposed dividend 14,000, so the total is 36,000. So next is your fixed assets. Under your fixed, we have tangible and intangible. So both tangible as well as intangible is been given in the problem. So under tangible we will have furniture, then land and building, then under plant and equipment. Under intangible we will have goodwill. So we will record these items in your working note. So under that we have tangible land, building, plant and equipment and furniture 1,09,500, 25,000, 30,000. The total is 1,64,000. Under intangible, as per the question, we have goodwill, which is 10,000. Next is our non-current investments. Under non-current investments, we will be recording what are the investments. In the question, we have investments in Z Limited shares, which is 15,000. So 15,000 has been recorded. 15,000 non-current investments. Next, trade receivables, we have bills receivable, as well as we'll have debtors for goods. So debtors for goods we have 9,000, and bills receivable we have 7,000, which will be recorded in the working note. So the total is 16,000. Next we have in the question cash and cash equivalents. So we have your cash as 38,000, and the other items are in the working note cash in and 38,000, and we also have cash at bank 38,000 and bank balance 72,000. So we will record cash at bank 72,000 and 38,000. So we'll have 1,10,000. So now these working notes will be classified in the balance sheet format. So now the balance sheet, John Smith and Co. Limited, balance sheet as on 31st March 2016, particulars, note number as on 31st 3 2016, equity and liability, shareholders funds, share capital, reserves and surplus as per the working note 1 and 2. The balances are being considered, which is 1,78,500, and reserves and surplus balance 48,000 is being recorded here, which will give you a total of 2,26,500. Next, non-current liabilities. Under non-current liabilities, we'll have long-term borrowings, which is your working note 3. Long-term borrowings, working note 3, which will give you 50,000, which has been recorded here as 50,000. Next, we have current liabilities. Under current liabilities, we have trade payables, other current liabilities, short-term provisions. So trade payables will have working note 4. Working note trade payables we'll have working note 4, which is 16,000, and other current liabilities will have 11,000 for working note 5. Then we have short-term provisions, which is working note 6, which is 36,000. So we have recorded all three as per the working note 4, 5, 6, 16,000, 11,000, 36,000, which will give you 63,000. So this is the total of your current liabilities, which is 63,000. So the total of equity, share capital and liabilities will be 3,39,500. Next is your asset items. So as per your working note, the asset items are fixed asset, you have tangible, working note 7, and intangible assets, which is tangible assets is 1,64,000, intangible assets which is 10,000. So we will record in the balance sheet asset, non-current assets, fixed asset, tangible and intangible 7, 8. According to the working note, 1,64,500 and 10,000. Next we have non-current investments. We have non-current investments in Z Limited shares, which is 15,000. So we have 15,000 non-current investments. So under working note 8, which is 15,000. So which will give you the total of 1,89,500. Next we have working note 9, trade receivables. Under trade receivables we'll have debtors and bills receivable, which will give you a total of 16,000. So we will be recording that. Under current assets we have working note 9, which includes 16,000 as working note 9, which is trade receivables, which is 16,000 as per the working note. We will be recording that here as trade receivables, working note 9, 16,000. Then we have cash and cash equivalents is not been recorded here, so please record cash and cash equivalents, working note 10, which is 1,10,000 as per the working note. 1,10,000 is your cash and cash equivalents. And in the question we have inventories, that is nothing but your stock, which is 24,000, which has been recorded here, which has been recorded in the balance sheet as inventories 24,000. So the total is 1,50,000 for your current assets. So the total of your assets is 1,89,500 plus 1,50,000 will give you 3,39,500, which is matching your assets and your liabilities. So the next problem what we're going to discuss is illustration 10. From the following balance sheet extracted on 31st March 2016 from the books of Modern Limited, prepare balance sheet in the form of prescribed under Companies Act 2013. So now we have land, share capital, building, calls and arrears, trade payables, capital reserve, stores, wages due, go down rent due, stock and trade, unexpired insurance, cash in hand, provision for employee benefits, and they have stated it is a long-term provisions. Then salary is due, which is outstanding, bad debt provisions, which will comes under short-term provisions, cash at bank will come under cash equivalences, cash and cash equivalences, computer softwares, plant and equipments, loose tools, which comes under your assets. Trade receivables, unclaimed dividend will come under outstanding, and unclaimed dividend will come under outstanding, which is your liabilities. Balance and profit and loss statement, which has a credit balance, which is nothing but your profit. 15% debentures is your long-term borrowings. Bank loan account is also your borrowings. Next, investment in equity shares, which will come under your non-current investments. So we will go according to the working note first and then prepare our balance sheet. So the working note what we are going to prepare is, first working note will be share capital authorized. So in the question, do we have okay, they have also given us the adjustment in the question. Additional information: authorized capital of a company is rupees 10 lakh, in equity share of rupees 10 each. 70,000 shares were issued and 63,000 shares were subscribed by the public. Calls and arrears of 10,000 shares, on which final calls of rupees 2.50 per share has not been paid. Bills discounted but not matured, 40,000. So first we will work out on the adjustment of shares. So now first we have authorized shares. As per the adjustment, authorized shares which is given in the question is authorized capital of 10 lakh in equity of rupees 10 each. So now that is 10 lakh divided by 10, which will give you 1 lakh equity shares of rupees 10 each, which is 10 lakh 10 lakh is the amount which has been authorized. Then issued as per the question is stated in the adjustment, 70,000 shares of rupees are 70,000 shares are being issued and 63,000 shares are being subscribed. So issued is 70,000 shares of rupees 10 each, which will give you 7 lakhs. Subscribed is 63,000 shares. Out of the subscribed of 63,000, 10,000 shares are your calls in arrears. So actually subscribed and fully paid is 53,000 shares. So the total is 63,000 which is subscribed. In that 63,000, 10,000 is not our calls and arrears. Calls and arrears in the sense which is not fully paid. So we will divide that actual subscribed which is fully paid is 53,000 and subscribed but not fully paid is that 10,000. So subscribe 53,000 of equity shares of rupees 10 each will give you 5,30,000. Subscribed but not fully paid 10,000 equity shares of rupees 10 each, which will give you 1 lakh. In that 1 lakh, we have calls in arrears at rupees, which is given in the adjustment, which is at rupees 2.50. So 10,000 into 2.50 will give you 25,000, which is your calls in arrears. So from the subscribed not fully paid of 1 lakh, we will minus the calls in arrears 25,000, which will give you 75,000. So the total share value what we have here is 6 lakh 5,000 is your subscribed and fully paid share value. So next is our reserves and surplus. So the items in the balance sheet are, we have capital reserves and we have capital reserves, and the other item which appears here is surplus in profit and loss, which is if it has a credit balance, it is nothing but your profit which is earned, which is 1,58,000 is the profit, and the capital reserve what you have got is 1,54,000, which will give you the total of 3,12,000. Then your long-term borrowings, we have debentures and bank loan. So in the question we have debentures, 15% debentures of 1 lakh. Then we have bank loan which is 1,50,000, which will be recorded in the working note, which will give you 2,50,000. Then we have long term provisions, which is clear stated in the question clearly, provision for employee benefits. Then provision for employee benefits, which is 15,000, which is your nothing but your long term provisions. Under long-term provisions, we have employee benefits funds, which is 15,000. Then we have other current liabilities. Under other current liabilities, we will have all the outstanding amounts and which has not been paid. So the outstanding amounts are, we have unclaimed dividend, which is outstanding. Next, we have wages due. Then we have salaries due. Then the other items will be go down rent due, which is mentioned in the question. Code on rent due. See, all the items which is due or it is nothing but outstanding will be recorded under other current liabilities. The total of it which will come across 41,100. So next is your fixed assets. So under this we have fixed asset, tangible and intangible assets. So tangible we will have in the question, we will have buildings, we will have buildings and loose tools, plants and equipment, and computer software will come under intangible, which will be installed in the system, which will come under intangible. So we have land and building, plant and equipment. Loose tools will go under inventories, as tools are smaller equipments and which will be replaced immediately. So under fixed we have land and buildings, plant and equipment 80,000, 2,12,500, 5,08,000, the total which will give you 8,500. So under intangible assets we have computer software, which is 4,900. So this is a software which has been installed in the system, which will this asset can only be felt and used. So which is 4,900, which lies under intangible asset. Next, under a non-current investments, all the investments will be recorded. So the investments are investment in equity shares, which is 2,50,000. So 2,50,000 is being quoted here. Next are inventories. So all the short-term assets, that is nothing but stock. That is nothing but stores, stock in any stocks which is kept in the which has been recorded in the balance sheet, and loose tools. So we have We have stores 90,000, loose stores 1,30,000, then stock and trade 2,50,000. So the total is 4,70,000. Then we have trade receivables. Under trade receivables, we have debtors for goods. So trade receivables, debtors for goods, which is mentioned here in the question. So we have trade receivables, which is 1,20,000. Then we have provision, that is bad debt provision, which is 6,500. So we will be showing in the working note, which is trade receivables debtors for goods 1,20,000 less provision for bad debt 6,500. This provision can also be shown in short-term provisions, or it can also be deducted from the related items. So which will give you 1,13,500. Then we have 10th working note, cash and cash equivalents. Next is our cash and cash equivalents, cash in hand and cash at bank. In the question, we have cash in bank and cash in hand. Cash in hand, which is 1,25,000, and cash at bank, which is 69,000, which has been recorded. So the total of it is 1,94,000. Next is our other current assets. So under other current assets, we have unexpired insurance. So what is unexpired insurance is nothing but which has the other term, which is, it can also be called as prepaid insurance. Any prepaid items will come under your current assets, and your outstanding will appear in your current liabilities. So unexpired insurance is nothing but your prepaid insurance, which is there in your question, which is 8,200 unexpired insurance. Then the last adjustment is contingent liabilities. So here in this problem, in your adjustment which is given in the question, which states that bills discounted but not matured. So when it is not matured, it is in a pending situation. So here it comes under the heading contingent liabilities, because contingent liabilities are those liabilities that may be incurred by the entity depending on the outcome of an uncertain future. So this expenses will be incurred by the company based on the uncertainty, or it can be occurred in the future, or such events remain pending until the maturity period comes. So until this maturity period comes, it is kept under a pending situation. So this will come under your heading contingent liabilities, which are not provided for present period. So liabilities for bills receivable discounted, which is 40,000. So now these adjustments classifications will be done in your balance sheet. So balance sheet as on 31st March 2016, equity and liabilities, shareholders funds, share capital and reserves and surplus according to the working note 1 and 2. We will be taking 6,05,000 and 3,12,000, which will give you 9,17,000. Next is our non-current liabilities. Under non-current liabilities in your working note, we have long-term borrowings and long-term provisions. So based on those working notes, we will be classifying in the balance sheet as working note 3 and 4, which is 2,50,000 plus 15,000, which will give you 2,65,000. Next is our current liabilities. So current liabilities in the working note are current liabilities, which is mentioned here is under working note 5, which states trade payables, which is unclaimed dividend, wages due, and all the other outstanding items, which is 41,100. So the total liabilities, equity and liabilities, will come across 18,41,100. Next is our asset classification. We have non-current assets. So under non-current assets, we have fixed asset, tangible and intangible. As per the working note, we have tangible, which is plant, building, and land, which will give you 8,500,000, and intangible assets, computer software, which will give you 4,900 under working note 6. So we will be classifying that. So the total of it is recorded 8,500,000 plus 4,900, and we have non-current investments, which is related to equity, which is 2,50,000. So the total non-current assets is 10,55,400. Next we have our current assets. Under current assets, we have inventories, which is working note 8. Under inventories, we have stores, loose tools, stock and trade, which comes up to 4,70,000, which will be shown in the balance sheet. Working note 8, 4,70,000. Then we have trade receivables. Under trade receivables, debtors and provision, which we have minus for the bad debts, which will give you 1,13,500, which is shown here as trade receivables 1,12,500. Next we have cash and cash equivalences. cash and cash equivalences, which as cash in hand and cash at bank, which comes across 1,94,000, which is shown here as 1,94,000. Under working note 10, then the other current assets. Under other current assets, we will have unexpired insurance, which is 8,200. So 8,200 has been shown here. So the total of our assets what we have got is 18 lakh 41,100. So the total of our assets and liabilities are being matched. So therefore the problem what we have, the balance sheet what we have classified is also right. So your contingent liabilities will not appear here because the situation is still not yet been met. So thank you everyone. The other problems will be discussed in the upcoming videos.